Good morning, traders. Welcome to another flow show. We are Tuesday, 29th of July, value date end of month. So we may see a few flows streaming in later in the day when New York is in. Before we start with the overnight headlines, which weren't that many, I must say, today, let's look at what we are offering to all of you, and that is this 40% discount on your monthly subscriptions, for which you can sign up today, as well as you can still enlist, only needing to be done once. Once you're on the list, you will get all the updates of what's to come when Forex analytics will be evolving into trading analytics. You will also be entitled to enter some kind of sweepstake for a few goodies. I'm not sure what's going to be the August ones, but it's always worth to enlist, obviously, to see what the evolution of Forex analytics, sorry, will be. And then, of course, you could still enlist for the um, trader funding program. And we also obviously have our one-on-one coaching sessions running for those who may have a few issues with their trading or just want to ask one of us a few questions that are left unanswered right now. This little lot here, I think we must have like at least a couple of centuries of experience in the market. Doesn't make us any younger, but yeah, I mean, we are always ready to help the people who struggle with their trading approach, obviously. And now, without further delay, the headlines. Well, as I said, there aren't that many overnight, but a few that are interesting. We've had the first day of the US China talks ongoing today. We will have another day. Besant is heading over to Stockholm, so we could expect a few lines perhaps over there. Do not expect, or I would at least not expect any deal headlines, real deal headlines with China, apart from the fact that they are working towards, etc. This is just one of meetings that are planned, part of that 90-day extension of the deadline to get a deal with China. Trump said that he had no plans to straight away go to China, but he's waiting for an invitation by the Chinese President Xi, who is, as we already know, a bit slow in extending that invitation to Mr. Trump. So, and I still think it may take a while of discussions and negotiations before those two meet in person, but who knows? Um, in regards to that U.S. China trade negotiations, Taiwan's Lai was supposed to have a bit of a visit to the United States on his way to Central America, but then China raised some objections against it, and Washington obliged and actually told Lai that he would not be welcome in the U.S. So that is uh, an interesting fact as well. I mean, usually there are no official ties between the US and Taiwan, but we know that Taiwan is one of those buffers that all the non-Chinese would like to keep in the South Chinese Sea, of course. So that could increase again a little bit of the pressure that there is on Taiwan while US and China negotiate. Um, their potential deal. Yeah, as Mike says, he was just in transit officially. Yes, of course, but we know what transit means when it comes to geopolitics. Okay, um, then let's go. What are we doing? Oh yes, we did have the first print of the US Treasury's quarterly refunding needs, they have been pumped up by some zero hedge aficionados saying it's like a record amount, etc. But they were as expected. So we will need to see the composition of all those new borrowings that the Treasury will put into place. But knowing Besant, knowing the approach that he has, like really doing a lot more bills right now, seeing where the interest rates still are, in the hope that those interest rates will come down and then they can go into longer maturities. Personally, not expecting a huge surprise there. If they would go any longer term maturities, that may be a bit of a surprise, and then put some upward pressure on the US longer term yields. But assuming that, notwithstanding the hike in the amount that they need to borrow, which was planned, by the way, assuming that Besant will keep his same line, I think the composition of the treasury auctions will remain relatively similar to what they were. Okay, then let's. So we had an OPEC meeting as well yesterday. JMMC. Whoops, what is all that? JMMC didn't make. That's one of my trading apps. Hold on one second, please. Just hold on one sec. Okay, I'm back. Oh, okay. Let me just take care of this. Right. I think this should take care of it. Sorry about that. So I was saying about the JMMC, the OPEC Plus, they didn't make any new recommendations, so we will have to wait for the next meeting to see what they will do in October, November. I think is the next really big plans to make decisions about the oil output. Um, then we are going straight away to what happened with those Trump meetings. We know that Starmer, UK Starmer, had a meeting yesterday, and first of all, Trump started on a quite positive note, but then gradually moved over into a more cynical comment about how Starmer is running the UK right now, and found it necessary to give a few gentle recommendations, saying that. First of all, he said that he wanted to keep Starmer happy, but then all of a sudden he veered on to saying like, okay, well, we can make our own steel and aluminum, and we know that steel is one of the products that the US takes from the UK. And from then on, Starmer just went mum, and he was looking more like a cardboard cutout for the rest of the meeting, especially when Trump started to talk about how Starmer should cut taxes, take care of the immigration, keep the people safe, and if he wanted to beat Farage, etc., etc. And actually, as a matter of fact, once the tone of this meeting changed, also the tone in the market versus the sterling changed somewhat, and I will have a look at that obviously when I will look at the rates. Furthermore, Trump then was very angry towards Putin, so now he threatens to really shorten the deadline for a truce in talks with Putin from 50 days to 12 or 13 days. We didn't have the final day yet, the final number of days yet set, but Trump said that he would decide upon it latest today. Um, then um, the EU deal. It is still there's still some uncertainties there because there is discrepancy between how von der Leyen understood the deal and what Trump said, and especially then talking about pharma. We have been discussing that in our room as well, and there seems to be really US saying that they haven't really decided upon pharmaceutical products yet, but von der Leyen understood that the whole deal would also include pharmaceuticals, and they would be charged a 15%, which is obviously somewhere, if we, it's always going to be an increased cost, but it is less than um, what other numbers were circulating, which are rather like 30 or maybe even 50% on pharmaceutical imports. The pharmaceutical imports from the EU to into the US represent nearly 60% of the pharmaceutical products that the US imports. So it is an extremely big piece of the trade deal, and if it's not yet decided from the US side and then agreed upon by the EU, that is still very much up in the air, I would say. So we had further comments and wondering really, we were wondering really who agreed upon signing this deal with the US from EU side, because now we had comments from the biggest country in the EU. Merz was complaining, saying it would cost Germany, the car makers, and all the German exporters a heap of money as well. So I think it's part of the reasons why the euro really tanked yesterday and early this morning is that there's still quite a bit of uncertainty for one, and more and more European countries, even though it is, as said in the room as well, political bickering, etc., but it doesn't seem that the Europeans are really very happy, and they fear that it's going to cost them more than just an arm and a leg to enter in such a fixed trade deal with the US. So nobody's happy around there. We had, oh yes, then there is also still Ishiba's situation in Japan. They had this meeting with the LDP heads. There is another meeting planned in the upcoming days. But interestingly, is that the people who voted and people who went to the polls, they did a kind of poll over the weekend. And interestingly, is that 60% of the voters would actually like Ishiba to hold on to his seat and continue to try and govern with a majority, I mean minority. So sorry, and find a common ground with one of the other parties to continue to govern. So that's a bit interesting, because we know that if they fail or if he has to step down, they will have to call elections. And it seems that the Japanese voter is a bit tired of going to the elections, and would like Ishiba to continue at least until 2026. And then coming back, Akazawa was also commenting, and it's clear that they are still trying to figure out exactly what their trade deal means with the US, and we're seeing more and more of those little comments here and there that they need some more clarity, they need some more this, need some more that. So before really putting a definite signature under the deal, and that I think is one of the reasons, except for when you look at euro yen, which was the euro bit yesterday, but why the yen is still remaining pretty defensive. Okay, um, and I think let me see. That is about it for what is not straight away data or headlines concerned. As I said, it's been a relatively quiet night for that. We had a bit of, let me scroll up, a bit of UK. We see here the price index, which rose a little bit. Also, we had ONS releasing some inflation data this morning, where the inflation due to meat and tea prices has ticked up a little bit again from prior ONS. It's ONS, of course. Data of 3.4% to 3.6%. Not that it really helped sterling too much, but just know that as expected somewhere, the inflation in the UK is remaining a bit sticky. Last night we had two auctions here, and the auction schedule this week is rather um, kept to the short end and the belly of the curve. We had a decent one yesterday and one that quite failed yesterday as well. So I would say the more important one, perhaps, even though the 5 year is usually a relatively important one. But then for those who are watching a little longer out, we have the 7 year note auction also coming out later on in the day. So that will be an interesting look, of course. For the rest, yeah, Swedish GDP, not really too much going on there. Norwegian retail sales completely flat. The Spanish GDP, and we know that Spain is one of the exceptions in the Eurozone. It's actually holding up relatively well, and we see the Q2 GDP in Spain also having ticked up, albeit only 0.1%, but that is keeping the year on year at a relatively healthy 2.8%. Has it helped for the euro rebound today? Let's not overstate Spain, but still, it may have had a little bit of an impact. We saw a pretty decent dump right around the time when 8 a.m. struck in Europe, in the UK, and then a bit of a bounce. Perhaps, just perhaps, this has helped just a little bit. We had the consumer numbers out, the credit numbers out in the UK, which I actually missed. So I'm looking at them as we speak. Mortgage approvals still pretty okay. Lending to individuals. Wow, what a jump that is. And the consumer credit also ticking up. I haven't seen the big part or what the part is in the credit cards, but perhaps somebody can enlighten me there. But a higher credit, depending on which kind of credit it is, may the number may look green, but it may not be as green as it seems, and too much credit in the system may actually be quite counterproductive there. So, and the net lending here is a bit of a testimony of this. It could actually, it's a double-edged sword. It could mean more activity somewhere, but it could also mean that people are um, are pulling more on their credit cards and not really. That doesn't bode very well for the consumer either, because they will have to repay that sooner or later. What's next? So as I said, we had a few housing data, but the first jobs related report is going to come out. The jobs opening. We have seen less hiring, but not too much firing of late in the jobs. So this number, I think we will walk in there with a relatively open mind and then see the composition of this number between hiring and firings, which may be, unless we get a big diversion of the expectations, which may be the more interesting one to watch, and maybe an initial dollar driver. Let's not forget that during that hour as well, we may have some US corporate activity, which was not always obvious over the last months. But if this shows a bit of a good number, it may mean that the dollar gets a pretty decent lift going into the 4 p.m. London fixing. We will see about that. Next night for us, late evening for the Americans. Around midday, I think that is, or very early afternoon for the Australians. We will have the Aussie CPI data. I will have a look at the Aussie today, because even though it is, we can call it relatively stable, it may get interesting, because you combine this with expectations for the RBA, then you combine it with what is going to happen next and from tomorrow, really, we are going to be in an accelerated data avalanche number of days or couple of days, and it's really going to be, I think, in combination with the CPI, it could get very interesting for the Australian dollars, especially seeing that it's been in a relative range of late. And then we will have before the next flow show, as I said, we will have a slew of European data as well. We will have CPI data, GDP data, consumer data in Europe as well, and GDP data in the eurozone too. So it's going to be a very active European morning. We can expect tomorrow. Before then, going into what I have not talked about yet, but I will right now before we start the central bank meetings as well. I will expand on the central banks tomorrow. Um, but just a couple of words. I don't think that we are in any move for the central banks, whether it be Bank of Canada, FOMC, Bank of Japan. The more important ones will be watching what they can give as guidance. But we also heard from all three of them that they are really data dependent and watching what the data will bring. So we might not get too much of a guidance either from the central banks. But as I said, I will expand on them on tomorrow's meeting. Today we are going to keep it relatively, actually, short or quiet. Um, right. Well, then let's go straight away into what has happened overnight. And obviously, the biggest mover, just give me a sec, please. Obviously, the biggest mover was the euro dollar yesterday, which really, and I'm gonna go on a shorter time frame, which was really really suffered pretty greatly. I already said yesterday on the show that there was a risk for the euro, the risk on that US EU deal, and really that risk materialized greatly over the rest of the session. As I said, let's see what the US wants to do with their own dollar, and they decided that it was time to buy some dollars back. Um, is this move over? Maybe. I'm not going to call it right now, but we have seen a very interesting bounce, and then we have seen an interesting bounce. First of all, this is the last rally that we had. We had this rally, then we corrected a bit. The last rally, we stopped bang on the 115.30, which is the 78.6. Whoops, sorry. What is that? Okay. If you look at it also a little longer term, we also stopped, and why don't I have it here? Did I only put it on the dailies? We also stopped on, or roughly on the 38.2 of the rally since May. Okay, so this zone here is really going to be relatively interesting, and then the next 30 plus uh, add another 50, 40, 50 points here, I think are going to be a very, very interesting zone because we see the low around here, which has also been high lows zone here, here. 115 is a psychological level, but I would not dismiss this 114.5 as well, because I've also said that on my update, and you can find the morning update in on our X handle as well, Forex Analytics on Twitter. Um, if you look at it from the very short term, this is awful. Okay, this is an awful move. But if you look at it more from the medium term, this move is still not starting to be undone because we are yet to test the 23.6 of this whole move, which is around 114.5. So short term, this is still looking quite bearish, and we will have to we will have to monitor everything that's going to happen in the next 3 sessions, okay? I mean, including this one, four. But because on Friday, obviously, we will have the jobs report as well. But we will have to monitor for the more medium term. We will have to monitor what's happening in this whole area actually, because this could still be a range building a range building period that we started somewhere from June, had that new high, came back down, tried to move up. Now we are lower than this prior low here, yes, but we are still not below those levels here from when we started to creep up again. So in the more medium term, this could still be a range building formation. Get back to the short term, that is the market telling us that they did not the initial details of the deal between the US and the EU. And as I said yesterday, if you look at all those deals that the US is striking, if you take them at really how it came on and what happened in the deals, it's still clearly, I think, a US victory more than specifically here a European victory. Okay. Um, okay. So again, short term, this is looking pretty weak, but respect those levels. I'd say before we get into the data dump on the rest of the week, get somewhere around here again. This kind of cross around here. I know those levels are evolving, but I'd say somewhere around 116 figure 20. I think that before the US or even before we get into the data really, we will find some decent resistance. It's gone fast, so allow as well for faster moves. There is this little level in between 115.70. There is this one around 115.90. Yes, it can show up, but seeing the speed of the move, I would rather look at a little wider on the levels there. Okay, I was short in this move in several legs. I've squared everything up today. I think it could still, as I said, be a range building move, but also seeing the speed of the move, it's also good to take the pips off the table and now wait and see what the data are going to tell us. Okay, that for the euro dollar, and I will. Yeah, Mike, I said the overall end of month thought is that there will be very, very mild dollar selling, but the signals are really not strong. Um, but today, as we know, sometimes the US corporates they have a bit of dollar shopping to do, so we may be in for a bit of a London fixing, which drags this euro dollar down a bit. We will see, because it's not been a guarantee by any means of in the last months, and that is also explainable, if you want, because all those US corporates, they have been front-running tariffs, not knowing exactly what is going to happen. The exports have been affected. Exports and imports have been affected by all of this. So it's a bit of a flip the coin to see whether the US corporates have their shopping to do. Moving over to the cable, and on face, and this is interesting, but on face, we were still trading well above 134 and well above this 133.65.75. But as I said earlier on the show, as this Trump starmer thingy went on, the market started to catch up with the euro dollar and lost its confidence a bit. This is the hold that I was talking about was really due to euro sterling dumping and all those euro crosses dumping, and then all of a sudden cable started to catch up. We are trading not too far below it, but it's going to be the little pivot of the day, I would say. 133.65.75, stretch it to 133.90 perhaps. This is going to be the hinge of our day. Any weakness in US data, could bring this back somewhere up in the 134s, 134 and a quarter. And I think on my daily update, I have mixed up my big figures, and I should have said 134, and I think I put 135 on there. But anyway, 134 and a quarter, 134.30, and then we will decide upon the day if the numbers start to really show weakness for the dollar. Then we can talk again about 135. But as it stands now, especially that there's been a bit of heat between Bailey and Reeves as well. Reeves wanted to talk to Revolut, but then Bailey held the meeting. I still think, and since the market is always quite emotional about the sterling, that cable as such may kind of remain on the defensive for a while. But then we have next levels 133 and 132 and a half, and I would draw your attention to the 132 and a half. If we get down before talking about 131s, but if we get down here 132 and a half, that's your next kind of big level on the cable, okay? And then we were talking about those euro crosses. If you look at that yesterday, big dump on all the euro crosses really, and euro sterling was no exception. We actually went under some really decent some decent support. Let me get on the short term, because the support show up a bit better on the shorter term. So that was a relatively decent short-term support. We dumped through this morning, but we just held above the prior low, okay, from where we had the last jump. So keep an eye on what's happening just around 86 and a half, just below 86 and a half there as well. That is going to be an interesting level. And then I come to you, Ali, with what you were saying there. Your long in euro sterling. Well, that's your risk level here, I would say. 64 and a half, just below 64.45. If we get down there, we have another one here around 86.30, which has been a pivot level for quite a while. But in the short term, that is a bit of a level. Where's your stop? 86.32. I think you're a couple of pips too high with your 86.32. Okay, everybody does what everybody wants, obviously. But you look at this move here. 86.30 is buying the 50% as well of this move higher. So I think your level may be needing a bit of adjustment. Either you bring it up until just below this low here, or you stretch it a little. And that's what I would say about specifically about your 86.32. Yen. For the best of the day, even though we saw the bid tone in the dollar, and even now the bid tone in the dollar remains, but yesterday for the best of the day, euro yen did take over, and I said, like, yes, dollar yen is holding the support, which it did. It already held as well overnight early doors this very minor line. Yes, the dollar yen is supported. Okay, yesterday was all about euro yen, and I think from today running into US data, we also have Japanese data upcoming, and then we have the FOMC and we have the Bank of Japan. US and Japanese and the Japanese yen are now taking over, okay? And even though this small level is probably valid because it has been traded, you bear it in mind just for in on the course of the day, 148.15. To me, though, it's not really a major level anymore, because we have been trading up and down through it quite a bit. I'd say rather 147 and a half, and not too far from where we are now, 148.70, 148.90. We have a bit of trendline action here. If you get through 148.90, it's only going to be a short step to come to the next resistance, which is 149.15, the prior high, and then 149.40. I think the 149.40 is going to be the gateway for 150. If that goes, that means we confirm we are through this high. If that goes, we are quite rapidly going to trade 150 in my opinion. But as usual, levels are levels and respect them, okay? To the downside, 147.5, confirmation through 147.15, then it goes back down. But it is holding relatively well right now, in my opinion, and I think this can continue. Euro yen, I I was long, and then yesterday I went out of my positions, and I'm quite happily staying out because I don't really have a clear view on the euro right now. If I see in the global scheme of things, if I see such a thing here, I'd say okay, anywhere close to 170 or 170.80, it's a buy, okay? But looking at the euro for now, I'm going to stay hands off. But if you start to break back above 172.2030, which was actually the high of the Asian session, it's potentially going to start dragging up again. I think 170.80, 170.80, 170.90 is going to be quite important. You see here it's a double fib action. It's also a low here. That is good, and it's the low of the flag. That is going to be very important. So ideally, I would see a retest, and if euro yen has to go higher again from here, seeing the rebound. Obviously, if, as I said, if we break through here, it's we may start to trade higher straight away. What else do you have? Sterling yen. Yeah, the sterling yen. It's holding. It is really holding. We've seen that little bit of weakness in the cable, but with the dollar yen holding, yes, we had a retracement of the one of the near 200 level down to 198. But I'm looking at the daily chart here. If you look at the daily chart, because it is such a volatile currency pair, I'm not really like to trade it really on intraday levels also. But what we saw yesterday is just a correction, and we are still keeping the overall bit trend in here for as long as we trade above 197 and a half, 197.30. That is, to me, going to be the zone of truth in the sterling yen, sorry. For as long as we're above, the overall picture still looks pretty positive. Interesting though is that rejection close to 200, which was also already the rejection in October. So we need to break 200. If it breaks 200, then I think we're off to the races for another move higher. Okay. Gold, we've broken the trend line, but as I already discussed on Face, a trend line is extremely interesting if the market goes to the trend line. And I clarify what I'm saying, and I've been saying that already a good few times. A trend line is always nice, and it's holding. But then at some stage, even if the market is in a range, it comes to market, and that's where I start to like it a lot less. And this, what I fear, or what I think personally happened with this trend line, it finally completely came to market. Okay, even with a with a slower, and as you can see, this is forming actually another triangle. We could say actually. Let me just try and put a line here. Now we've been through it's not valid. But if the market starts to gradually stabilize, your trend line is going to come to market. Yes, it played a role. Yes, respect it. Okay, it's 33, 45, 50 or so. But then we saw the drop below when it broke. Yes, and I explained why as well. If you people are striking deals, less need of a hedge. The dollar was doing better. The gold is coming down. Yeah, but then now let's see where we go from here. And that is going to be now dependent on data, US yields, and maybe whether the US China can find some sort of a structure of an agreement or of a deal. If they do find it, we can correct lower. I still think the major level here is 32.45. For as long as 32.45 holds, the overall trend could still be just one of a correction here, and we can still trade a lot higher. On the intraday, 33.0510, and then you have also 32.8590 below. Back above 33.45, then we talk again about 33.7075, which has shaped up as a very interesting zone. So if it comes up back up there, have a close look at what happens. Okay, I still think that in this whole thing, when people strike deals, when etc., silver should do better. Nothing's changed in yesterday, so that is just what it is right now. I'm still trying to be very patient for these levels, but maybe sooner or later I will have to pay up. And then I promised you to have a look at the Aussie 65, the figure from May. We're trying to get away, trying to get away, trying to get away, trying to get away. Where we are, 65 the figure. It's really the magnet of the market right now. And as I said, with the upcoming slew of data, with the Australian CPI inflation data, there is a chance that we are going to go for a bigger move. Now, depending on what the dollar really tells us, we may have a chance finally of trying to find a bit of a bigger move. Okay, unless everything comes out as expected, and then we are going to I think continue to just yo-yo around 65 the figure. But in the assumption that we get numbers that are going to create a move, um, we could actually see either, and I'm very neutral right now, but I'm going to be very interested in the next move, because especially if we start either to break below 64.5, okay, 64.45, 50, or if we start to break back above 65.5, okay. If one of the two occur, then I think we are going to be in for a relatively decent move, call another percent or so. It may not look much in terms of pips, but it is a really it is a relatively decent move. But for as long as we hold then that extra 1%, we could still be in this big yo-yo. It really will have to break those levels here, 63 three quarters, 63 and a half, to get going, and 66 and a quarter. Okay, but I do think that the combination of the numbers that we get, and I'm going to be interested in those moves, we could see a relatively decent move unfold as well. Um, as I said, I'm extremely neutral, but I would be maybe a little more interested in seeing this kind of move, finding a bottom, and then starting to go higher again, because I still haven't given up completely on my global dollar bearishness. Okay, ladies and gentlemen, I think for today I'm going to look at the Canadian dollar maybe more in depth tomorrow, but we are trying again, and the longer term picture tells me that we need to break above 138, high 137s, low 138s to really ramp higher. We are trying, but we continue to bang our head here in the dollar CAD right now. We are trying right now again, so the possibility is there. The combination of trade talks going badly between Carney and Trump, and the FOMC and the in the Bank of Canada, it is possible that we start to fly through, but I'm not convinced yet. Okay, I need confirmation here on the dollar cat to go higher. All right, that is it for me. Have a good rest of the session. Trade safely. Uh, Save some energy, because today is only one day for the big 3 or 4 that we are going to get. Okay. Thank you for being with me, and we speak again tomorrow.